Welcome to our 260-second weekly webcast. If this is the first time you join us, welcome. If you've been with us before, welcome back. And so the way this call works is this is an AMA like you see on Reddit. You can ask me anything. You can ask me business questions, career questions, investing questions, any questions you want to. And my goal is to humbly help you take your career, your company, or your portfolio to the next level. So I'm going to take your questions, and then what I'll do is I'm going to give you a quick live demo of this and how we can use this to be better investors, right? There's issues with this, but I think it's a great Gen 1 product. Okay, I hope you like the Tony Shark theme here today. All right, a little bit under the weather, but it's okay. I've got my Coke Zero here. I'll be all right. I'm caffeinating up. All right, first up, I got Jitan wrote, a very good morning, sir. Chris, please. Should we take an analyst, say at JP Morgan interview, with a grain of salt? I was once listening to a reporter asking analysts about their past decisions. Yeah, always take it with a grain of salt, because what happens is there is an ethical wall between sell-side analysts and investment bankers. But if an investment bank takes a company public, and this is the S1 for Facebook, or Meta, I should say, they're not going to say anything really negative about any large tech company. And the reason is, if they say really negative things about a company like Microsoft, for example, then Microsoft might not hire JP Morgan, for example, maybe, to do future investment banking work. And so as a result, the analysts from these sell-side firms are usually neutral to positive. So a lot of times when a stock gets downgraded from buy to neutral, you can kind of take that as a sell signal. They're bearish on it. And I remember years ago, there's a very, very large investment bank, I can't disclose which one, which approached me to ask me to become the sell-side analyst at the company covering the software and internet sector. And I was at the hedge fund industry at the time, and I said, I'm not interested, but let me call my buddies. And I called one of my friends who was a sell-side analyst at a smaller firm. And I said, they're looking to hire. Do you want me to make the introduction? And he said, they wouldn't hire me. I said, why? And he said, because I had a sell rating on Microsoft. Yeah, so take everything with a grain of salt. Yeah, everybody's got a bias. The same thing when it comes to whenever you see a portfolio manager or an executive or a CEO or an entrepreneur interviewed on television, take it with a grain of salt, because they're great salespeople. That's how they got to where they are. I mean, a CEO is a great salesperson. And the worst thing you can do when you're doing investment research on a company is watch an interview with the CEO. Like, don't do that until the very end, because they'll bias you. And I remember when I worked at Goldman years ago, and we worked on a number of IPOs when I was there, eBay went public and a bunch of other companies. And I actually fell into a trap and invested in companies that didn't do that well. And one of the reasons why, and I'm very critical of myself, as you know, transparency builds trust, I hope, is because I watched the management team present before doing my own research. Always do your own research, then watch the management team present. Yeah. Okay. And then Jitan wrote, thank you so much for the online MBA course, the weekly classes. As a beginner, I found these most relevant. I'm glad you enjoyed it. Thank you. Thank you. I think my teleprompter is a little bit crooked today. I hit my head on the back of the camera when I was getting ready, and it's a little bit crooked. Sorry about that. Prashant, how are you? You wrote, greetings from India. Hope all is well at your end. You wrote, hope you've seen my email. Yeah. So I have, I love helping my students, but the problem is I have 1.5 million students from every country, and it's so hard for me to answer every email. If you want to reach me, I love you. Always ask me here on this weekly call. Okay. And then you wrote here, seeking guidance to navigate India's startup scene, focusing on skills like market understanding, networking, and negotiating tactics for success. Yeah. If there's any particular questions you have about networking, I'm more than happy to help you out. As I've said many times before, your network is your net worth, and relationships are more important than product knowledge. And the most important piece of advice I can give you as you're building out your career is never walk into a meeting and start talking about business right away. You always want to bond before business. Always. Yeah. Okay. All right. You're most welcome. Caroline, how are you from Canada? Great to see you. You're in Nova Scotia now, you wrote. Excellent. Hope your cats are doing well. Next up, Devon wrote, good morning, Chris. Good morning. You wrote, my best regards to you and your family. Thank you. And then you wrote, as money supply is down around $1 trillion, trillion. What is a possible thing which is holding the markets at all-time highs? Yeah. So I think the U.S. economy is stronger than expected. A lot of people underestimate the power of the U.S. consumer. And 2/3 of GDP, meaning revenue for the country, for the United States, is consumer spending. It's not big business. And I think one of the reasons why consumer spending is holding up so well is because during COVID, there's this whole new mentality of YOLO, YOLO, standing for you only live once. And so people are saving less and they're just spending. Yeah, it's good for the economy. All right, Leigh, good morning. Good to see you as well. Thank you for that image. Okay, Eric, how are you? Eric from Florida. Great to see you. Eric wrote, with respect to the 2008 banking crisis, how and when did you react? Did anyone see this coming? Who responded the best? Yeah, I remember back then I was running my hedge fund and I had an analyst that worked for me. And it was September when Lehman Brothers went belly up. And I told him, dude, there's so many ideas, so many long ideas we can start buying. And he threw his fist down. His name was Jason Chu, great guy. Threw his fist down and he said, I don't want to buy anything. And he explained why. And he saved my company, my hedge fund. And so he went net short. We were up, I think it was like 3 or 4% in the month of October. The markets was down like 30 or 40%. And the reason why Jason was able to foresee this was because he had friends in fixed income. And some of the best performing portfolio managers on Wall Street, equities portfolio managers, meaning stocks, they have buddies that work in fixed income, meaning they see the yield curve, they understand what's happening to future rates, etc. So the bottom line is you always have to have friends that are fixed income experts as well. Yeah. But it was uncomfortable. It's one of the reasons I shut down my hedge fund was I would come into work every day in the fall of 2008 and hope that negative things would happen. It wasn't a healthy way to live. Like I was short a ton of banks and I hoped they go belly up. It wasn't healthy at all. And so what I did was I transitioned my fund into a more of a VC type hybrid fund and did an investment in Facebook before it went public. Yeah. Okay. And if you have additional questions about what happened in the fall of 2008, please let me know because we were within 24 hours. A bank machine's not working. Scary time. Yeah. And I remember I lived in Burlingame, California at the time. And the people on the left and the right of me, their houses, they foreclosed. It was like a ghost town. It was scary. And what breaks my heart is that the government saved the banks. And then 2 years later, the bankers gave themselves record bonuses. Meanwhile, the average person in America lost their house. Not cool. Yeah. So I understand now this whole Occupy Wall Street philosophy. And last night I saw a great movie on Netflix it's called Dumb Money, about GameStop. And I recommend watching that movie too. It was fascinating. A lot of great stars I want to say, Seth Rogen is in it too. But it really helps you understand the Occupy Wall Street movement and why retail investors really want to get back at hedge funds. Yeah. But remember, market manipulation is against the law, so be careful. Okay. Next up, Phil Germany. My God, it's been a couple of years, man. I hope you're doing well. You were my first student to ever publish a book using my book template. The name of your book was Super Students, about chess. I remember it, very prophetic. Great to see you. You're at Rockwell still, right? In Cincinnati? I think so. You wrote, considering your options class, how close should the actual option price in Yahoo match the price we calculate using the Excel model? Yeah, the difference you're going to find there is the historical versus implied volatility. So the options spreadsheets that I provide you with in my MBA program in FA 44, that's Finance and Accounting Semester 4, Class 4. What I do is I analyze historical volatility, and we do a quick regression analysis and a lot of statistics. And so the difference between the Yahoo Finance prices and my prices based on that model and your inputs is all based on the implied volatility versus historical volatility. And some of the most sophisticated options investors out there, they make a killing because they think that the implied volatility on a stock, meaning a put or call, is way too high or way too low relative to the historical volatility. Yeah. All right. Andre, how are you? Great to see you. The best quote I ever heard from Andre was he told me that he learned that closed mouths don't get fed. And I totally know what you mean there. You always have to ask for a raise, ask for promotion. Anybody that gets a promotion or a raise, etc., has asked many times behind closed doors. And if anybody wants to learn exactly how to do that, I'm more than happy to do so. All right, Manas, how are you from India? And Manas, I was thinking of you, man. It was my birthday on February 2nd. I bought myself this. It actually shipped to my house that day. And we went out for Indian food. And of course, I had the dosa. So good. Yeah. But the hot sauce is really hot, man. It's brutal. Yeah. For me, at least. Okay. Next up, Devon said, a large amount of 5 banks failed last year, and the Fed Bank Term Funding Program is at 165,238. Do you think the Fed will keep saving banks if there are more bank runs, please? Yeah, absolutely. Yeah. The banking system is the glue that holds the economy together, which is why a lot of banks were too big to fail and got rescued by the U.S. government in the fall of 2008. In fact, if it wasn't for Ben Bernanke having done his PhD at Princeton in depressionary economics, I think the economy would have been much worse off. Yeah. The banks are the glue that holds together an economy. Yeah. Now, it broke my heart to see what happened with Silicon Valley Bank last year. The issue is that, in the past, whenever you wanted to redeem your money from the bank, or you'd line up to get your money out. And in 2008, little side note, what happened was some crooked hedge funds apparently hired actors to line up at certain banks in New York City that they were short. But the issue with Silicon Valley Bank now and modern banking is that we can all redeem immediately using our mobile handsets. So it's shoot first, ask questions second. And so everybody redeemed their money from SVB. Didn't have to happen. Yeah. But I think that if there is a material pullback in large cap banks, in terms of the amount of outstanding debt they have, the U.S. government will also rescue them. Kind of like what we saw with the TARP program in the fall of 2008. TARP stands for a Treasury Asset Repurchase Program, where the government bought a lot of crappy assets to recapitalize the banks, meaning to put money into the system. Yeah. Okay. All right, next up, Manas wrote, good morning, my dear mentor. How are you? Apple Vision Pro is live, and how's it doing? I see a bunch of people using it in the United States while walking and in the metro and even sitting somewhere. I've seen people use it at the gym as well. I have my own gym, a large gym in the garage here. And what I do actually is I wear it, and I'll give you a demo in a minute or so, and you can ask questions about it. I wear it in my gym in the garage. And what I do is I have screens all over the place where I monitor my investments. I watch the latest episode of Curb Your Enthusiasm. Funny show, they're in their last season, and much more. And it's good because what you can do is you can actually see your entire environment and drag and drop windows. The only problem with that is that it's not like real life. Like, you can tell it's simulated. So you do get a little bit dizzy after a while. But I've gotten very little motion sickness from this compared to other products. Now, if you look at Oculus and other VR products, 40% of people that use these products report motion sickness. In fact, the Department of Defense signed a $20 billion contract with Facebook, or Meta, in order to use Oculus for surface warfare exercises. And 80% of the DoD employees that did that with the Oculus product reported motion sickness. The genius of this is that motion sickness is much less. This is just Gen 1. And again, I'll give you a demo in a second. And what I'm going to do, actually, when I show you the demo, is I'm going to take questions and read the questions as well using this. And you'll see exactly what I'm looking at. I'll show you in a second. Let me go through the questions here, though, first. And then Manas wrote, the Fed is going to drop rates. Hold on a second. The Fed is going to drop rates in May, maybe, and they're worried on inflation. What do you say, and why are the markets outperforming everywhere? Like Nikkei was at a 25-year high versus the S&P 500 all-time high. Yeah, the Nikkei is still well below the all-time high from around 1990. Structurally, the Japanese economy's had a lot of issues. It's really sad because in Japan, right now the population is 130 million. And in a couple decades, it's going to be 80 million. Yeah. I've got a big soft spot for Japan. I started my career doing Japanese equities at Goldman Sachs years ago. Yeah. Yeah. But I think the government did a pretty good job of raising rates and curbing inflation. Yeah. And we did have a soft landing, so they did a great job. Yeah. Okay. All right. And then Eric wrote, how do you short regional banks? What you can do is this. You can go to etfdb.com, that's etfdatabase.com, and you can find ETFs that are mid-cap bank based. And that way your exposure is more diversified. You're short like 10 or 20 mid-cap banks instead of individual ones. Safer way to short too. Yeah, check the short interest first though, always. And anything that has a short interest ratio above 10, just stay away from it. Yeah, and I can go into more detail now if you want me to. Yeah. Okay. And then Manas wrote, maybe the bankers actually got record bonuses in 2009 itself. That was what I saw in the documentary. Yeah. Yeah, it was like a year or two afterwards. Yeah, and it's ridiculous, really. Yeah. Wes, how are you? Great to see you. Next up, Phil Germany wrote, how does high-frequency trading compare to regular investing? Yeah, there's some controversy over that, given the fact that some hedge funds, I don't want to go into too much detail, but some hedge funds, what they've done is they've actually created their own fiber optic networks between certain parts in the country so they can front-run the mutual funds, right? Which is shady. Yeah. Okay. And then next up, Manas wrote, I want to suggest you a series called TED Watch. It is damn hilarious and cool. You'll love it. It's TED. Oh, I watched it. Yeah. The TV show. No, I have watched it. I love it. I love TED Part 1 and Part 2. They're great. Yeah. Mila Kunis couldn't be in Part 2. I think she was pregnant. That's why she was only in Part 1. Yeah. Okay. And then Study Well wrote, hey, Chris, what do you think about Web3 use case in finance? Well, I'm going to show you in a minute or two right here. Web 3.0, meaning a more dynamic user interface. Yeah. And then Prashant wrote, can you please share your thoughts on how best to approach business tycoons for mentorship? What strategies have you found effective in initiating these conversations and fostering meaningful mentors? Yeah. So, and then you wrote, especially when they are in your LinkedIn friends list. Yeah. So what I always recommend doing when it comes to networking is do an advanced search in LinkedIn and find people with a couple of things in common with you. I'm not going to make this up. Let's say that I find a CEO of a firm that's based here in the Bay Area, and I did a search and I found out over LinkedIn that she also went to McGill University, where I went to, and she also went to, say, the Toronto French School, where I went to as well when I was a little kid. I learned French before English in school. So what I would do is I would send her a quick in-mail and say exactly this. And always send in-mails, because emails, people don't open them, and everybody in this call has read every in-mail you've ever received. In the in-mail, I would just write this. Joanne, hope all is well. I'm also a graduate of McGill University, and I also went to the Toronto French School and lived in Mississauga. I'm based here in the Bay Area as well. Please let me know if you have time for a coffee or a quick Zoom call. And you keep it short like that. And just understand that people want to help you, especially people that are older than you. And if you don't believe me, then I want to ask you this question. Let's say that 20 years from now, you're 20 years more successful than you already are today. And this younger version of you reaches out to you. You know, went to the same school, from the same hometown, and asked for an informational meeting. Would you take that meeting? Of course you would. You have to ask. Ask and you'll receive is prophetic. It's been true since the beginning of time. Yeah. All right. And then next up, Manas wrote, I'm not getting political. Let me read this first. But will Mr. T... Yeah. I have no way. I see the same information you see as well. It's the first thing I saw here when I read Apple News right here with respect to the Supreme Court and can he run and all that stuff. Yeah. So I have no idea. Yeah. Am I a Democrat or Republican? It all depends on who the candidate is. I go back and forth. I'm probably more of a libertarian, like Bobby Axelrod. Yeah. Okay. Okay, next up, Prashant wrote, I'm now starting semester 4 of the Silver MBA program. Yeah, and then joining Silver calls from next week onward. Take care. Awesome. Yeah. So every single Thursday at 10 a.m. Pacific time, meaning in an hour and a half or so, I do a 1-hour Zoom call with just my Silver students. And I'm happy to help as much as you want to during that call, or you can ask questions here, always, yeah. And then for those of you in my Gold and Platinum class, we have a 2-hour call every Thursday from 11:20 until 1:20, yeah. Okay. All right. Devon wrote, as I was looking at the Fed fund rate chart, the market in 2000, 2008 crashed when they dropped the Fed fund rate. Can that happen again? When will they drop rates again? No, I love all your questions. Yeah. So what happened in it was yeah. So the Nasdaq peaked at 5,000, I think it was in March of 2020, but there were two black swan events, meaning rare events that occurred in '01 and '08 and 2020 as well. In '01 it was 9/11, tragic. In '08 it was the financial crisis we talked about earlier today, and 2020 it was the pandemic. So when those three events occurred, the government had to cut interest rates in order to help the economy. Yeah. And the problem is that when times are good, like they are now, the government should raise interest rates. And that's good fiscal discipline, because if you don't do that, when times are bad, you can't cut rates to stimulate the economy, right? You can't jumpstart the economy. Yeah. So you always have to raise rates. And one of the issues with what happened during the pandemic, and nobody foresaw this, but when the economy was doing very well, between 2016 and beginning of 2020, the government really should have been raising rates, right? And the Federal Reserve is supposed to be an independent body. Yeah. I'll leave it at that. Okay. But I think governments around the world did a good job during the pandemic of cutting rates materially, because it was unprecedented. We had no idea what was going to happen. Yeah. Okay. All right. I love all your questions. Keep them coming. Okay. And then Chris wrote, hey, Chris, hope you're doing well. Likewise. Does fundamental analysis actually cover the idea of pattern analysis in a company's analysis? Yeah. Yeah, when you're doing fundamental research analysis, it can be quantitative in nature to the extent that you can use Excel and machine learning and artificial intelligence to see if there's a correlation between data sets. And for those of you who have signed up for my complete artificial intelligence course, which is an elective in the MBA program, if you go to the 6th section of that, I teach you how to use Excel and do regression analysis, meaning machine learning / AI. Yeah, that's part of fundamental analysis. Yeah. Okay. All right. And then Harkirat wrote here, I'm in engineering, but I want to become an investment banker. What should I start doing to become an investment banker? Yeah. In Silicon Valley, we always say it's easier for an engineer to transition into finance than vice versa. What I recommend doing is network like crazy. Yeah. Because people are going to look at your background. And if you just send in your resume, you probably won't get an interview. It's tough. In fact, every time you see a job opening online, you have a 1 in 250 chance of getting that job. So who gets the job? The person that knows somebody at the company. So start networking. As I was answering earlier to Prashant's question, find people that have something in common with you, a couple things over LinkedIn, and they work in investment banking, for example, and set up informational meetings. Yeah. Okay. All right. Let's now move on to the demo. You guys can ask questions too. I'm nervous, man. See if this is going to work here. I like challenging myself. Okay. So what I'm going to do is I'm going to go over to Zoom and share another screen. Okay, that's my screen up top. So I'm going to put this on. Okay, and hold on one second. Let me just get a little bit more real estate here. Okay, so I am now going to, it's doing an eye scan to see if it recognizes me. Okay, it does, good. And then I'm going to go to Control Center. Give me 1 second. You guys will see what's going on in a second here. I'm going to share the MacBook Pro. Oh, you're kidding me. Let's try it again. Oh, for crying out loud. All right. So give me 1 second, guys. Okay. And that's my up there. This is me editing up my billions video up here. So I'm going to go here and try one more time. If it doesn't work, I'll have to come back to it later. I feel like Bill Gates when he used to do his demos. And he had the blue screen of death in front of the whole world, which is what's happening to me right now. All right. Okay, I'm going over to Control Center, Mirror. There it is. I see it. Good. All right, I'm now sharing the MacBook Pro screen. And then up there, up top in a second, you're going to see what I see. It says it's connecting. Unable to connect. I'll try one more time, and if it doesn't work, I'll come back to it a little bit later. Sorry about this, guys. All right, what I'm going to do It says too far away from the display. All right, so what I'll do is I'll come back to this in a second. It says unable to connect. So in the meantime, what I'll do here, look at my hair, is I'm going to show you a quick video of what I recorded early this morning, just in case this happened. I was nervous. So what you see right here, this here is me using Excel. Okay, that's Excel. And then right there, you can see all the screens. I paused it right there, and it's going to unpause in a second. There you go. So you can see all your screens there. So if you want to monitor all your windows, so to speak, instead of having a gazillion different monitors when you're like traders do, you can actually open mini Safari windows at the same time. And that's a book I'm editing there on the right side there. A book of mine coming out in April. So anyway, that's it there. Please keep asking questions, and I'll come back to this and try to fix this issue. Yeah. Damn. I nailed it this morning, too. It killed me. All right, I'm going to try one more time, and then if it doesn't work, we're going to move on, okay? All right, let me try again. Okay, good. All right, so I'm going to Control Center, Retina Scan to recognize my eye. Control Center right here. This is where people leave my webcast. Okay. MacBook Pro, trying again. It's trying to connect. Give it a second. If it doesn't work, I will move on to something else. But I will say that the user experience is great when it works. It's not that robust right now. So anyway, I'll come back to this later. All right, please keep typing your questions if you haven't. Sorry about that. I'm going to try to get this to work a little bit later on. So I created this series that many of you have asked me to create more videos for, which is Wall Street Pro Reacts 2. And so I've done a bunch of movies, like the movie Wall Street, The Wolf of Wall Street as well, and also the first 5 episodes of Billions. And I'm going to do every single episode this year of Billions and create a 20-minute vlog on each one to teach finance that way. So what I'm going to do is I'm going to show you my latest vlog on Billions, which explains short selling in a lot of detail. So give me 1 second here. And if you have questions about it, please type your questions. Okay. And while you guys are watching this here, what I'll do, look at my hair, eh? What I'll do is I'll try to get the VR product working. I'll be back soon. Thanks.
Yeah, where? I'm coming.
Let's talk about finance lessons from the 4th episode of Billions based on my work experience at Goldman Sachs in New York City and based on my work experience at the top hedge funds in the world. Now be sure to comment, please, and like, and stick around, because at the end of this video, I'm going to grade the episode for Wall Street realism. Now, in this episode, one of Bobby Axelrod's portfolio managers suffers from depression and other issues, and Bobby pulls some strings in order to get the police to drop the charges, and Bobby tries to figure out what is going on with this guy.
You're not tanking anymore. I've seen your runs. You pulled past even. Open road ahead of you.
It's an $8 million day.
Now, there's so much pressure in the hedge fund industry to make money quickly, and many in the industry suffer from depression and other issues, which is why having a psychiatrist on site makes a lot of sense.
It's Dr. Mojo.
Maybe I'm depressed. Maybe I should try some Prozac.
Now, when I worked at Goldman and at the top hedge funds, we all had access on site to top psychiatrists, especially after 9/11, which we really needed. And I wish more companies offered mental health services for employees for free.
Okay. You got something in your stomach now. The cops are far away. This is when you tell me what transpired inside that head of yours.
Now, what this guy did, trying to unsuccessfully shoot animals on the lawn, is awful. And one of the problems with some hedge fund employees is that they're never happy, because the cancer of Wall Street is that people compare themselves to those that make way more money. And I'm certainly guilty of this. Every bonus season, we were never happy because somebody got paid more than us.
You ever do this thing where you pull up your positions and just stare at them on the screen? Try to really hold on to all that money inside?
No. Doesn't make you feel happy when you do?
As Bud Fox said in the classic movie Wall Street, how much is enough? You know, how many yachts can you water ski behind? And very quick side note, but please read this life-changing book here called The Art of Happiness. As the Dalai Lama says, the problem with Western society is we sacrifice our health our entire lives in order to make money. Then at the end of our lives, we sacrifice all of our money to maintain our health. And then we look back and we realize we never really lived to begin with.
Like it's enough?
No.
Right. Because what drives you doesn't understand enough.
What do they do with this money? What do they spend this money on? Well, of course, like the guy you see right here, they own beautiful homes. But where do they own their homes? Well, many hedge fund employees live in Greenwich, Connecticut, which is a 45-minute drive from New York City. And I worked for a hedge fund billionaire in New York City that owned a house that I visited on a forced family fun weekend in Old Greenwich. And his property was the size of a couple of football fields. And many people like Bobby Axelrod also own vacation homes in the Hamptons, which is about a 2-hour drive from New York City. Now, if you flaunt your money as Bobby does, then often district attorneys are more likely to investigate you, which is one reason why Chuck Rhodes is investigating Axe. Here's what Bobby thinks of the Hamptons.
It's so nice though, you know. Feels like you're part of the beach and ocean. Your daddy's got a little place out there. He must let you use a bedroom some weekends if you say please.
Walk away.
Now, this is awesome drama, but not realistic, as smart billionaires maintain their low profile so they don't get investigated. It's kind of like how expensive sports cars get pulled over more often by the police, even if they aren't speeding.
I can't have this. Can't give the world another reason to hate us. Can't give a wedge to law enforcement, a way in.
In this episode, Bobby's enemy, Chuck Rhodes, blackmails a former employee of Bobby's named Pete Decker.
Well, then you go to jail, Pete, and so do Mom and Dad. So is it prison or start talking?
This is accurate, and most people settle, of course, to avoid jail time. Now, there's an interesting twist here in the plot that we'll discuss soon, where this guy Rhodes and his dad could go to jail for the exact same reason. More on that later. But can the government even get to Axe?
How does the day start at Axe Capital? What does Axe do?
Anything he wants.
Accurate. Bobby is so insulated as the corrupt trades are done by people that work for him and not by him. He bribes so many other people that information tends to come directly to him.
I mean, he's like an aircraft carrier in the center of a strike group. When he turns left, battleships, destroyers, subs, they all turn left with him.
Now, information is power, and he has more access than most other hedge funds do. He's able to piece together the mosaic or information he receives in order to beat the market.
He sees everything. When you are Bobby Axelrod, you don't chase information. Information flows to you.
And it's going to be really hard for the government to get him. But just like with Al Capone with tax evasion, eventually the government will win. And successful people can read people, and they have incredibly high EQs. And in this episode, a trader that works for Axe tries to get a raise.
I did get the offer, but I did turn it down. That's what I was coming to tell you.
Good, because it seemed like maybe you were trying to tell me if I didn't match it, you were going to leave.
Accurate. The best way to get paid on Wall Street is to get another offer. And many Wall Street traders switch firms every 2 years so they can get a higher compensation package. Of course, do this too many times and your loyalty is questioned, and Bobby certainly calls his bluff right here.
No, I was trying to be loyal.
You don't try to be loyal, you just are, or you're not.
And many Wall Street employees choose Deutsche Bank as a last resort to get paid before they retire. It's kind of like a golden parachute. And it's a risky move to mention leaving, and of course, only do it when you have another offer in hand. Portfolio managers understand this, as they likely did the same thing earlier in their careers, and you do have a family to feed. But do this more than one time to a boss, then your loyalty and reputation is at risk. But then again, closed mouths don't get fed.
Metallica's playing one North American gig this year. Tonight, Quebec.
We going?
You're half right.
Like always, when the owner leaves on vacation, the owner has to put out fires when he is away. More on that soon. Now, the band members of Metallica are likely libertarian, just like Axe, as they don't have a tread on me type mentality. Now, before the flight takes off, one of Axe's employees talks to him about getting in trouble for a trade.
A guy I talked to who traffics in the name says he's hearing whispers. The contract's going to be canceled. This opens us up to contract steering, manipulation. It opens me up.
course, Axe insulates himself so his employees get in trouble and not him. And it's important that if you work at a hedge fund, never ever rely on the hedge fund's legal team to protect you, as they of course care mainly about the founder.
I didn't have the board seat when we took the short position, and I don't have anything to do with the day-to-day at Yum Time or the contracts with vendors.
Now, in episode 3, Bobby joined the board of Yum Time, which ships its cookies using Crossco shipping. And Bobby is on the board of Yum Time, so there is clearly a conflict of interest that the government can investigate because the largest customer of Crossco shipping is Yum Time. And if Yum Time were to cancel its contract with Crossco, then Crossco shares would go down a lot. And this episode deals with shorting stocks, which is really, really complicated to understand. And so what I'm going to do is I'm going to explain this using an edutaining analogy. So when you buy a stock, I'll use a football here, so it'll be fun. When you buy a stock and you own it, it's kind of like being long a stock, kind of like you're going long in football. And how does a short work? Well, let's use a really silly example here that has nothing to do with finance to explain this. Let's say I buy this football right here for $100 from a store because maybe it's signed by Tom Brady. I then realize that this football isn't worth $100 as it's deflated a little bit. So I can either return this to the store and get my $100 back, or I can sell it to someone else for $100. So let's say I decide to sell it to this shorter person here. Thank you. Then the person I sold it to realizes that, hey, this isn't worth $100. And so I say, okay, how about I buy it back from you for $90? And I do. Sure, I'll sell it to you for $90. So I gave him $90 and now I'm left with $10. Then I decide to return the football to the store and get my $100 back. So I just made $10. Let's now learn about how a short works by first of all watching this short clip to set the stage. And right here, Chuck Rhodes' father is going to try to get even with Axe for firing his girlfriend from the board of Yum Time.
My guy on the stock loan desk, guess which hedge funder's got himself in a precarious short? Ripe for a squeeze.
If you're talking Bobby Axelrod, this just became my favorite round of the year.
So the stock loan desk refers to the sell-side prime brokerage firms, just like Goldman Sachs or Morgan Stanley, for example. And what these sell-side prime brokerage firms do is they lend shares to hedge funds for a fee so the hedge fund can short companies. And the way a short works is a hedge fund like Axe Capital borrows the shares in a company like Coca-Cola, for example, at the current price of $59.37. And Axe must return this share to the stock loan service with a small fee. And so Axe borrowed this share of Coke at a price of $59.37 because he thinks Coke will go down. Axe then sells the shares of Coke to another hedge fund at the price of $59.37 as Axe thinks that Coke will go down. So Axe sold this. He now has cash of $59.37 that he got from the hedge fund that he just sold the shares to. Now let's say that Coke reported awful earnings and the stock drops by $10 to $49.37. Well, Axe will then buy back the shares for $10 less than what he paid for it. Then he returns the shares to the stock loan company and he just made a $10 profit, just like the football analogy. Thank you. However, instead of Coke going down, let's say that Coke went up $10, then Axe would actually lose $10 on the trade. And if a short goes up a lot, then Axe would get short squeezed out of a lot of money, which is called a short squeeze. And this is what Chuck Rhodes' father hopes happens. In fact, if you want to hurt somebody that has a short position on, you buy tons of shares to make the stock go up. And hedge funds that are short companies usually have what's called a stop loss level, meaning a price much higher than where the stock is now, where they get out of the position. And this is really, really good risk management. And Rhodes' father immediately gets on the phone, as you can see here, and starts buying the shares of the company that Axe is short. And the short squeeze concept is a key theme in this episode. The stock Axe is short is called Crossco. Then Chuck Rhodes' dad lies about positive news on Crossco that led to a Wall Street analyst upgrade in the stock, which made the stock go up a lot. And stock market manipulation is, of course, against the law.
Reuters upgraded CXC Crossco Trucking to a strong buy.
That's bad for our short target.
Because the stock was upgraded, it's rising a lot. And as a result, the prime brokerage firm who lent the shares to Axe wants them back, kind of like a margin call. And Axe might be using leverage, meaning he might not have enough money in his account to buy the shares back at a much higher price.
Look at that email. They're recalling our shares. Pulling the rug. I'm calling Axe.
Axe has to decide what to do, as he might be forced to cover, meaning buy back the position much higher. And you really have to have a strong stomach to hold the line and stick with a short position that's going up against you.
What do you want to do? Bleed some off?
No, we gotta hold. It's gonna pay off big time. The thing you gotta remember is, if a short's going against you, you got to be able to withstand the pressure or it'll crush you.
And Bobby and his sidekick, Wags, what they do next is they call the prime broker, meaning the sell-side firm that lent the shares of Crossco to Axe. And Bobby wants to ask if he can stay short the position.
Get the prime broker on the phone right now. We need another day on Crossco, but we need the shares back now.
Now, the prime broker's boss is great friends with Chuck Rhodes' father.
I do what I want.
And the prime broker's boss told Chuck Rhodes' father about Axe's massive short position on Crossco. And the prime broker wants to make Axe cover the position, as the head of the prime brokerage firm is good friends with Rhodes' father.
Axe. I hung up on the little tool.
Good.
What now?
Scour the 13F for Crossco.
Now, by law, if you manage over $100 million, you have to disclose what you own through what are called 13F filings with the SEC. However, you don't have to disclose what you are short. So Chuck Rhodes' dad found out illegally that Axe is short Crossco. And Axe wants to hold tight and not cover the shares, as there's negative news coming on the stock very soon, which knowledge of is illegal, of course.
Find me the top 10 shareholders. Hedge funds, not institutions.
Now, Axe wants to hold tight and not cover the shares. And the catalyst, meaning the event to make the stock go down, will soon be released to the market. And Axe thinks the stock will go down, hence he really wants to keep the short position on, but the prime brokerage firm will not let him do so. Axe is stuck. He has to return the shares quickly, meaning he has to buy the stock back at a much higher price and lose a fortune. And so he decides to see who the other investors are by looking at the 13Fs. Now, you can always do this in Yahoo Finance by clicking right here on holders. And he wants to call other hedge funds that own the shares that can help him. And he's able to protect his position by likely buying shares from a rival who he hates, but has to negotiate with, named Ken Malvern.
Ken? I'd call you Sir Ken out of respect for your advanced age and your accomplishments, but as much as you like it, you were born in Chicago, and no one born there was ever knighted.
And Bobby is able to borrow the shares from that dude and promises to give him 25% of the profit on the short. Now, at the same time, this episode has a complicated twist because Chuck Rhodes is investigating Axe for insider information on Crossco. But Axe finds out that Rhodes' father is driving the shares of Crossco up, which is stock manipulation and, of course, is against the law.
Your father is fluffing Crossco trucking stock. How much is your cut? How are you?
And as a result, Chuck Rhodes has to stop investigating Axe for this insider information on Crossco. And technically, it's actually Chuck Rhodes' money driving up Crossco.
Oh, that's right. Your inheritance is being held in a blind trust.
Now, Chuck then has to have this very uncomfortable conversation with his father.
Dad, I know.
I do what I want.
Do not make another phone call tonight.
Now, in the end, Chuck and his dad will have to find another way to get Axe, and Axe lives to trade another day. And so Chuck's father lost a fortune on this trade. Also, Bobby made $15 million on the short position of Crossco because Yum Time announced they will no longer ship their cookies using Crossco. And we find out about this as Bobby's friend, who went on the Metallica trip with him and piggybacked on the Crossco short position, just saw this.
And in a near-term crippling blow for Crossco, its biggest and longest-running client, Yum Time Bakeries, has announced it is dropping the trucking company, citing rampant driver violations.
Let's talk about grading of this episode for Wall Street Realism with a buy, hold, or sell rating. The episode did a great job of introducing the anatomy of a short squeeze, but it's highly unlikely that Axe's enemy, this dude, Ken Malvern, would help him, and we didn't really find out exactly how Malvern helped Axe. In addition, although the writing is superb from a character development perspective, the coincidence of Rhodes' father being involved on the other side of the trade while Axe is being investigated on that trade by Rhodes is too much of a coincidence. As a result, I'm going to give this episode a hold rating. Please comment, like, and subscribe, and I will see you soon in our next reaction video when we react to episode 5. Thank you. All right, thank you everybody. Appreciate it. So what I'm going to do now is I'm going to switch over, and I'm using the product right now, the Apple VR product. Let me show you first of all behind the scenes here. So I got 2 camera angles, one there, and then one over here. And these lights here in my studio, the reason why it looks like that honeycomb is so it cuts the light across so I don't get too much glare on the back over there. Okay, so what I'm going to do right now is I'm going to show you how this works. So right now I can see everything in my office. So I'm going to switch over to block out everything. So I now am seeing this here. Okay, good. And so if I turn around, it's really nice, actually. Beautiful, eh? Okay, so that's what I see right there. This is the screen here where I can monitor the questions. So what I'll do is I'll answer questions here. And let me just take a quick peek on the side. Good, it's working. Great. I'll take a couple quick questions here, and then I'll show you the rest of this. All right. Question here from James is, would you recommend a university degree or apprenticeship to start a career in finance? Network like crazy, and if you still can't get the job of your dreams, then switch over to doing a degree. Okay, so let me show you this mode right here. So what's cool about this is a lot of traders, hold on a second, a lot of traders have mini monitors like I do. And what you can do in Safari is you can have all these windows open at the same time, which is pretty cool, eh? There's Shark Virtual Reality. So if I go right here, I can go to sec.gov, and it's not that intuitive to figure out how this works. But if I want, I can, and I'm looking right there at Apple, and I click my fingers as you see there, and I can look through all the financial statements here as well if I want to. Yeah. And it can't see exactly what I'm looking at. But anyway, you can read all this crap here if you want to. Aside from that, you can use Siri a lot as well. Hey Siri, show me apps. Show me apps. There you go. Good. Okay. And then what you can do, let me see if I can show you Excel hell. Okay, restore previous purchase. I'm not going to do that. Okay, close. All right, so let's just start a blank sheet here. So here it is here, and I can drag it if I want to and throw it over here behind me, right? And so what's behind me here is also, I can turn off this background. So you can see, this is my backdrop here. Let me turn that back on there. Okay, cool. All right, so you whatever you look at, it actually, that's where the mouse cursor is. Hey Siri, stop. It's buggy too. Hey Siri, what time is it? Okay, that's the only way to turn it off. Okay. So in Excel, it's pretty cool. This is a dumbed down version of Excel here. You can also share your actual monitor if you want to, in order to use the real version of Excel. But it's not bad actually for Gen 1. Okay, let me see if I got questions here. Okay, so Zaid wrote here, hey Chris, what do you think about the Apple Vision Pro? Is it the next big thing in personal computing hardware? I think it's a great Gen 1 product. The problem is the pricing point is way too high, and it's not that robust yet, as you can see by the many mistakes that I made today. It's probably user error on my part, but it's a great Gen 1 product. I really enjoy using it. Anything that makes work more enjoyable, I think, is a worthwhile investment always. But I like it. So let me go here and see if I can watch this webcast with you guys to see how it looks here. Oh, good, it's working. Excellent. And there's a bit of a delay there in personal computing hardware. I think, yeah, so what you could do actually is I could even have this. It's a great Gen 1 product. The problem is the pricing up on the ceiling is too high. It's not that robust yet, as you can see by the many mistakes that I made today. All right. Probably user error on my part. But it's a great Gen 1 product. Hey Siri, I really enjoy using it. Close Safari. Anything that makes work. There you go. Hey Siri, show me apps. Okay. And there's some half decent games here as well. My kid Dylan has played around with this a lot. The issue is there's no killer app yet for this, for the Vision Pro. But they got some pretty cool productivity ones here you can try out. You can try Zoom and you can see my avatar, which is redonkulous. I look like a robot. Oh, PowerPoint. I haven't tried that one out yet either. But it's pretty good for Gen 1. It's interesting that Microsoft jumped on board to support them. Thank goodness they did, because Google is notably absent from this, as well as Netflix and many other companies. But you don't need to install the Netflix app to watch Netflix. You can just do it directly in your browser. So let me see if anybody has any questions. Hey Siri, open Safari. More enjoyable, I think, is a worthwhile investment always. But I like it. So let me go here and see if I can watch this webcast with you guys to see how it looks here. Oh, good, it's working. Excellent. And there's a bit of a lag there. Let me go to see the questions you guys might have here. I'll click right here. Okay, I don't see any questions here. Okay, maybe I'll refresh that. Let's see. Yeah. Okay, cool. So I'm going to take this off now. And if you guys want me to put it on, if you have more questions, please let me know. Okay. Yay, it worked. Woo! All right, let me go back over here. Yeah, messes up your hair. It comes with a couple of different adapters as well. I find this one here is much better to use. It doesn't hurt your head as much, but it's very top heavy. Okay, fun. All right, let me get to your questions now. And thank you everybody for your patience with me today. Thank you. How about a courtesy like? Yeah. Okay. Give me 1 second to catch up here. Okay. And then Eric wrote, can you read small fonts in the glasses? It's not bad, actually. So what I did, you might have noticed, is the font size is 8 million, because my eyesight is not as good as it used to be. And if you have glasses, what you can do is you can actually put the glasses in here. You have to order special Zeist ones. And then you throw this in, which snaps in. It's a really good build quality. They could have made it a lot lighter by using plastic if they wanted to. And I totally understand why the battery is separate. Otherwise, it'd just be too heavy. But I think if you were to strap the battery on the back, it would kind of balance the front. You'll see there's indentations in my face as well. And a lot of people, what they've done is they're using, you wear a hat and then you put the goggles on top of the hat and then Velcro in order to make it not hurt your face as much. Okay, I'm glad though that we went through and gave that demo. Okay, thanks everyone for your patience as well. All right, let me go through your questions here. Okay. Yeah, so with respect to James about going back to school, as I mentioned earlier, before considering spending $100,000 on education, set up a gazillion informational meetings. If you still can't change careers after all those informational meetings, then go to school. Yeah, that's what I always say. Yeah. All right, John. Hey, John. John wrote, hey, Chris. When is it tax beneficial to switch from an LLC to an S Corp to save on tax expenses? I need to consult a tax consultant to address this. Was hoping you can answer. Yeah, absolutely. So if you own your own company, most people do an LLC. It's the cheapest way to basically limit your liabilities and incorporate a company and hire people. However, if in your company you don't have any employees, that like I don't, I never will, I have contractors, then what you do is you switch to an S Corp. Because with an S Corp, you can pass through a lot more expenses, but you definitely want to talk to an accountant first about this. You go to LegalZoom.com for more details. So why do a C Corp? Well, the reason you would do a C Corp is if you're trying to take a lot of investors, right? So a lot of startups, they start as an LLC because they have a couple employees. And then once they get venture capital money, they have to switch to a C Corp so they can take many more investors. Yeah. And everybody's tax mandate is different. I always recommend everybody to have an accountant. Never do your own taxes. Okay. All right. Next, Ingrid, how are you? Good to see you. Ingrid is one of my students from Redwood City here in the Bay Area. Just started my Platinum MBA program January 29th. Great to see you. You wrote, how I wish my former CEO knew exactly that workers have a family to feed. Yeah, with respect to, yeah, I know. Yeah. And one thing I'll say, and I've got a new Billions blog that's coming out tomorrow, which I spent a lot of time editing. And in it, I talk about being underpaid. And a lot of billionaires are very cheap. That's how they became billionaires. Right? They're very cost conscious. Warren Buffett still owns the same house he bought in 1958 for $31,500. He still lives there. And if you work for somebody who doesn't pay you enough at bonus season, then in that case, I say this. One data point usually makes a trend, and you should look to leave so you can get paid what you're worth. Yeah, they're billionaires for a reason. Okay. They're not all like that, but you know what I mean. Okay, next up, Nathan wrote, "Good morning, Chris. How are you? First time I've seen you on the call. I hope you join us again." You wrote, "When are you putting your Python course on Udemy?" It's coming. It's coming. Yeah, at some point. Yeah. Okay, we're still working on it. Okay, but it's on my website now. If you're in my MBA program, you can get access. I'll show you guys quick. Okay, so if you go here to, still got that running. So if you go to learn.harounventures.com and you sign up for the silver, gold, or platinum MBA program, then these electives are included, and the Python's included as part of it. Yeah. And this year, what I'm doing is I'm adding a lot more tech courses. I don't know if I sleep very much these days, but I love doing what I'm doing. And I'm also adding a very comprehensive real estate course, which I've promised my students for years now. And I feel bad I haven't delivered on that. But I'm going to be releasing it by the fall of this year. There you go. I put a deadline date. I said it publicly. I got to get it done. Yeah. To answer your question, March. Okay. All right. And then Devon wrote, "If interest rates go down, will it be better to go with a 2-year bond or a 30-year bond, please?" I mean, when rates go up, bonds go down and vice versa. Yeah. It's tough. So I would say I would look at the 30-year closely for locking in a 30-year mortgage. Right? Lock it in as far away as you can and refinance every couple of years. In terms of the gap between the 2 and the 30-year, right now the 30-year is lower. And basically what that means is we have an inverted yield curve. So people are forecasting that we are going to go into a recession. That's what an inverted yield curve means. Yeah. But there's an inverse relationship between bond prices and yield. So for example, let's say you buy a bond and it's got a 5% yield. Okay. And it's a discount bond, right? It matures at $100. Say you buy it for $95, right? Just keep it simple. And you buy it, it's got a 5% yield, and say the government rate is 5% as well. If the government raises interest rates to 10%, then the value of your bond's going to go down. There's an inverse relationship because people are going to think, why own that 5% bond when I can invest in a 10% government bond now? Yeah. So there's an inverse relationship always. Yeah. Okay. And then Devon wrote, "As I am doing the gold MBA, will there be options class, or do I have to hear it from Udemy?" No, if you're registered for the gold MBA degree program, if you go to FA44, that's Finance and Accounting Semester 4, Class 4, there's a 30-hour options elective there. Yeah. And please never, ever, ever buy any options till you practice for at least 6 months. And I teach you exactly how to practice. And then create a paper portfolio, which you can do at thinkorswim.com. Then only buy puts or calls. Don't ever underwrite them, because the losses, if you underwrite, can be infinite. Yeah, it's very dangerous. Yeah. Okay. In terms of my additional thoughts per your question, Zaid, on the Apple Vision Pro, again, it's a great Gen 1. It's not that robust, as I showed you today. It's also heavy. It's really heavy. Yeah. Even when I'm lying down watching it in bed, I have to actually use my fingers to prop it up a bit sometimes because it hurts. Yeah, that's how heavy it is. But they nailed it. I mean, nobody in VR comes close to this. I've tried all the VR products. Yeah. The price will come down. It always does. And McKinsey published this great report in the late 90s saying that every single month, the price of all components in televisions, computers, mobile phones, etc., goes down 0.6%. Think about that. Every single month. So the pricing point of this will come down materially over time. Yeah. Okay. And Eric wrote, "Great video on billions. Thank you." And again, episode 5 is coming tomorrow. I'll publish it tomorrow. Yeah. And then BX wrote, "Is Matterport involved with Apple Vision Pro?" I don't know what that means. Sorry. And Devon wrote, "It looks great with glasses." Yeah, it's cool. It's cool. If anybody has more questions, please type them now. This is your time. I'm here to humbly help you. Yeah. Last question I see here is from Vic, who wrote, so Chris, in your opinion, when is it enough? Like it was asked in Wall Street. Yeah. What's a responsible answer to that question in your opinion? Yeah. Yeah. How many yachts can you water ski behind? Yeah. I think that if you make money your God, you'll never be happy. Yeah. You'll never be happy. And I know a lot of billionaires. I've worked for them, and I know their kids as well. You know, from gone to Columbia University for my MBA, working at the top hedge funds and Goldman and stuff. They're not happier than us. Yeah. They're not happier. And there are some very noble billionaires, of course. And yes, I am a capitalist. But there's also billionaires that got to where they are by, walking all over people and, and cutting corners. And sometimes you'll see a billionaire gets into trouble for insider trading. And you're like, oh my gosh, why did he do that? He's already worth a fortune. Why would he risk his life because of that? Because he's been cheating the whole time. Yeah. Yeah. I think if you chase money, you lose your dreams and your money. But if you chase your dreams, you don't care what anybody thinks of you, kind of like Tony Shark, then your dreams come true and the money falls accidentally. It always does. Yeah. Okay, great. Well, I don't see any more questions. Okay. So I'll give you guys 10 seconds or so to write questions. And if not, I guess we can wrap up early, which is not a bad thing given my cold, but thank you. Yeah. Okay, great. Okay, so at 10 a.m. today, I'm doing the Zoom call with my silver students. I will see you all then. And then Vic wrote, awesome answer. Thank you so much. You're most welcome, guys. Most welcome. Thank you. And I am going to sit down. I never sit down, but I actually have a chair right here. Just give me my cold, but yeah. Devon wrote here, if we want to project PE, price earnings ratio for a company, can we take the industry PE? I wouldn't do that. You can do that for the industry PR. But when it comes to price to earnings, you value companies based on the earnings growth, right? Of course, you look at similar companies, but you look at what's called a PEG ratio. What does that mean? Well, the S&P 500 historically trades at about 15 times earnings, which means for every $1 in earnings, PE, for every $1 in earnings, investors are paying 15 times. And the S&P 500 also has an average rough earnings growth rate over time of 15%. So think of it this way. A PE of 15 divided by 15% growth, 15 over 15 is 1. That's a price earnings to growth rate ratio of 1. 15 times earnings, 15%. If a company is growing at faster than 15% earnings, it should trade at a higher price earnings multiple. So a company that is, has earnings growing at 30% shouldn't trade at 15 times. It should trade at least 30 times. And a company that has earnings growth of only 8% shouldn't trade at 15 times. It probably trade at 8 times. Right? So again, a PE multiple is for every $1 in earnings, how many times that $1 are investors willing to pay? So you look at the PEG ratio, price earnings to growth. And it's a simplistic example I gave you, but it'll really help you appreciate how to value companies that are growing quickly. Now, a lot of hedge funds, what they'll do is they'll look to short companies that are trading at over 2 times their earnings growth rate. So if a company has earnings growth of 15% and it's trading at 30 times earnings, well, 30 over 15 is a price earnings growth rate of 2. So hedge fund look to short it and vice versa. Of course, there's a lot more that goes into it than just that. But what I recommend doing is instead of valuing companies based on this year's earnings and next year's earnings, you create a forecast 5 or 10 years out into the future, okay, an income statement forecast. And then you value the company based on your earnings estimates in 5 or 10 years. And that way, you'll understand why growth investors love to invest in companies that seem expensive today. They're not expensive in the future. They're expensive today. For example, years ago, I invested in Amazon when the founder was still running the place, Jeff Bezos. I don't invest in companies when the founder leaves. And people said to me, Chris, this is a widowmaker. Why would you invest in Amazon? It's got a PE ratio of over 100 times. And I would say, no, it's got a PE ratio of 4 times my earnings estimates in 10 years. So it's cheap to me. And you always have to forecast your financial statements many years out and value the companies based on your earnings forecast in 5 or 10 years. Yeah. Okay. All right. And if you have additional questions about PE, let me know. Now, when it comes to valuing companies that are not profitable today, what you can do is you can value them based on PE, based on your earnings estimate many years from now, like I mentioned, or you can value them based on a price to revenue multiple, P over R, meaning for every $1 in revenue, how many times that $1 in revenue are investors going to pay? And that is more sector based. And it depends on also the market, how the market is doing. So for example, in the summer, I think it was the summer of 2012, I invested in 3 software IPOs. And they were ServiceNow, ticker NOW. I met with Frank Slootman and Fred Luddy in my office, the founder. There was also Splunk, ticker SPLK. I met with Godfrey Sullivan. Splunk got bought by Cisco late last year. And the other one was Workday, and met with Anil Busri, the founder, WDAY. And I mentioned those 3 companies because back then they weren't profitable, but they were all trading between 15 and 20 times revenue. And so that was the metric we looked at that point in time. It's all relative. All right. And then Eric wrote, is it possible to use options pricing model to compare real estate? That's tricky because your real estate's not that liquid. So it's tough to get the historical volatility and even see what the market is pricing in for implied volatility. But what you could do if you wanted to is you can look at REITs. And maybe you can trade REITs. REITs are real estate investment trusts. It's like stock tickers. They have high dividend yields because by law they have to pay out 90% of their operating profit as dividends. And you could see if you can transact on those options. Let me do this in real time, see if we can figure this out. This is fun. Okay, let's go over here. So let's go to finance.yahoo.com. And then let me type in, I don't even know what a REIT is. Ticker for a REIT. Give me any ticker for a REIT. Let's go REIT, see what comes up here. Okay, I guess let's do this one here. ARR. And let's see if there's options on this. Let's go here. Options. Yeah, here you go. Okay, so for this REIT, you can look at options, right? And so you got implied volatility all the way on the right here. Open interest, liquidity, and all that stuff. Options really aren't that liquid, right? And you can look at different expiration dates the next couple of years. You want to look at leaps. Yeah. Oops. Not for that point. Yeah. But the more liquid a stock is, the more underlying options there are for it. So if you were to look at, Apple, Apple, it trades like water. It's really liquid. So there's going to be just a ton of liquidity relative to other companies in the options market, right? So look at this. Tons of liquidity. You can go out a couple of years as well. So you can, wow, look at all that. And options usually expire on Fridays. Yeah. Nothing there. Should be there. I think there's a mistake here in Yahoo Finance. Those definitely exist. Yeah. Okay. All right. Let me go back here. I'm so psyched I got it to work, man. I was nervous there. Thank you, everybody, for your patience with me. Yeah. Especially because I put that sign up and all this stuff. Yeah. It's not often I get to wear my Tony Shark shirt either. Yeah. Okay. And then Manas wrote, how is the Bitcoin ETF going? And what the future says, by the way, Bezos selling stocks in years for the first time. Yeah. Jeff Bezos, I think, wants to free up a lot of capital. He's in donation mode. And also he wants to spend a lot more money on rockets. Yeah. In terms of Bitcoin ETF, it's really positive news, man. Like before, when you buy, the problem with buying Bitcoin or cryptocurrencies, it's such a complicated process to set up these Ledger Nano wallets, right? And you feel so uncomfortable doing it when you set these things up. So once you get it set up and you're about to make your first transaction, you usually cut the order size in half because you're nervous. But now that the SEC has blessed, that's a big deal, Bitcoin ETFs, it's friction-free. It's easier to buy. And it's the same impact as when the gold ETF, ticker GLD, was first released back in 2004. It was amazing when it came out. You can buy gold, ticker GLD, and you pay 50 cents in fees per $100 per year. And it's a beautiful thing because what you can, and this is fake, but it's a beautiful thing because what you can do is you can get in and out of gold quickly if you want to. And you don't have to worry as to whether or not it's real. Yeah. So it removes a lot of friction in terms of people being able to buy gold, and similarly, people being able to buy cryptos. Yeah. Now, if you're going to transact in a Bitcoin ETF, only use a reputable company like a Vanguard, for example. And I talk a lot about Vanguard and ETFs in my next Billions vlog that I'm going to be publishing tomorrow. Yeah. And I explain why mutual funds are a scam and why you should invest in ETFs instead. Stay tuned for that vlog tomorrow. It'll drop tomorrow morning, I think, yeah. I usually drop it on Fridays at 10 a.m. Pacific time because that's 1 p.m. New York time, and a lot of traders Friday afternoon, you know, it's slow. Yeah. Okay. All right. And Manostro, thank you for everything. My mentor, God bless you all forever and ever. And thank you. God bless you. Namaste. I love you, man. Yeah. Okay. And then Devon wrote here, if a company's price earnings multiple is 89, meaning for every $1, companies investors are paying $89. If a company's PE is 89 and the 10-year EPS CAGR is 9%, is it 89 over 9? Is that correct? Yeah. So the way I look at it is this. When I value companies, what I do is I value them based on their earnings growth at that year. I'll give you an example. Let's say I'm analyzing a company, right? And I don't look at CAGR. I look at what I think the growth is going to be many years in the future. So if I forecast my financial statements, okay, my income statement, my earnings, and if between year 4 and year 5, I have earnings growing from $1 to $1.20, what I'll probably do is I'll value the company based on 20 times $1.20. And that'll be my target price. Why 20? Why 20 times? Because it's growing at 20%. Yeah. Hopefully that makes sense. Yeah. It's tough to look at CAGR because there could be massive upswings, downswings, and a company might be unprofitable for many years. Yeah. Yeah. Another thing you got to really pay attention to is where the company is in terms of its growth cycle. You know, is it a value stock or is it a growth stock? And that matters a lot because investors are either growth investors or value investors. And we'll use a real-time case study with Meta with what happened with earnings last Friday. So growth investors love investing in stocks that are growing quickly. And value investors love investing in stocks that are cheap and have dividends. What about in the middle? Nobody lives here in the middle, right? It's investment purgatory. Never invest in a company that is in between growth and value because it might take decades for people to want to invest in it. And so what Facebook did last Friday was pretty smart, actually, when they reported earnings. It was last Thursday. They basically said, hey, we're going to issue a big dividend for the first time. And growth investors don't like Facebook anymore because it's not growing as fast as it was. And value investors all of a sudden said, you know what? Maybe this is a value investment. And that's why the stock went up 20%. So you also have to look at the type of investors in a company. Again, never invest in a company when it's stuck between growth and value. So what can cause a company to go from growth to value much faster? Meaning, how can they avoid investment purgatory in the middle? Well, what can happen is an activist investor like Carl Icahn can come in and buy a 30% stake in the company. So he has to file a 13D and bully the management teams to change the company. And this is exactly what he did with eBay. So before Icahn invested in eBay, investors were confused. Growth investors love the PayPal side of it, which is growing fast, but they hated the sleepy auctions business. Value investors hated the PayPal assets. It was growing quickly. They like stuff that's more sustainable cash flow. But value investors loved the sleepy auction business because it throws off a lot of cash. And during recessions, people buy and sell more used stuff. So the conundrum was growth investors didn't like eBay. Value investors didn't like eBay. So Carl Icahn, with his activist hedge fund, bought a big stake in the company. And then he altered the management team, pushed a lot of them out actually, and he split the company into two. One was PayPal, and the other part of it was eBay Marketplace, the auction business. And these two went up a hell of a lot more, and the company was worth a lot more as two separate companies than it was together. So the bottom line is always understand if a company is growth or value. Now, in terms of are you growth or are you a value investor? It all depends. Like for me, when I was in university, I was more of a value investor because I was taught, buy when stocks are cheap. But then I transitioned after I worked in the hedge fund industry and worked in venture capital to being a growth investor because it's exciting. And you can look at the value of companies many years in the future. And as I mentioned before, Devon, you value companies based on the earnings growth rate in the future. Yeah. Okay, cool. Oh, Mark, how are you? Satans wrote, hey, brother, shout out to the Global MBA gang. And thank you so much for help with that YouTube thumbnail a couple weeks ago. I appreciate it. You wrote, what does it mean the regulators turn high-speed hedge funds into dealers? Yeah, I don't know. Transitioning to broker-dealer, I don't know. I have no idea. Yeah. But watch that GameStop movie if you can. It's really, really good. Called Dumb Money. Yeah. All right. I don't have any more questions. I thought people were going to ask more questions about this thing as well. Yeah. All right. So I'm going to wrap up this call. Thank you. Please click like, subscribe, and all that stuff. It helps me. And then for those of you that are following my Wall Street Pro series, tomorrow at 10 a.m. Pacific time, I'm going to release Wall Street Pro Reacts to Season 1, Episode 5 of Billions. And I teach you how to use the media in that blog tomorrow to make money. And I also teach you how to find out what other investors own to make money as well after you do your own research. Yeah. Okay, Q Franco said you missed my question. Okay. All right, let me go through this here. So, by the way, if you paste questions, oh, here it is here. Okay, I see it. Yeah. If you ever put in certain keywords, YouTube will strip it out. Yeah, and hyperlinks as well. I see your question. I'll answer it in a second. And a couple weeks ago, I showed you guys all that warning I got from YouTube with respect to an issue. I had a student a year and a half ago talk about COVID stuff, and so I didn't get a strike, but I got a warning. But they removed it here, which is great. They had me do training, whatever. Yeah, and this year's just analytics. Okay, and let me get to Q Franco's question. Oh, when will the new Python course be available on Udemy? Yeah, it will be. Yeah. Okay. All right. And let me see if there's any other questions. Sorry for missing your question there. Okay, Benny, how are you, man? And then Mo, hey Mo, how are you? Mo wrote, hey Chris, how many cameras do you recommend to use for recording, and what setup do you recommend? Yeah, so what I do is I have two cameras. Now, I'll show you the setup here actually in real time. If I can get this damn thing to work again, I'll try here. Okay, give me a second. I can see through here. It's doing a retina scan of my eye first. Okay, hold on. Let me go up here to share the screen so I can show you everything in my studio. Hey Siri, open Control Center. Okay. Here we go, good. 1 second. Mirror screen. Whoops. MacBook Pro. And if this works, I'll show it to you. And if it doesn't work, what I'll do is I'll explain everything to you. I recommend having two cameras at least whenever you're recording content. This is me buying time. Because if you make a mistake, you can always re-record that it won't connect. Sorry, I tried. It'll always, I can always revert to this camera angle here if need be, right? So when I'm recording my courses, my MBA programs and stuff, if I make a mistake, I just transition to look at this camera here. So always use two cameras, yeah. And you want to make sure you record audio on all your cameras as well, but record audio separately on your person as well on you. The reason you want to record audio on the cameras is so that you can automatically synchronize the audio tracks from the two cameras. And cameras ship with crappy audio, but you need audio on the camera stuff so you can always, line up everything. And let me show you what that means if you're curious. I'll show you here actually. All right, let me go here. All right, this is my other computer up top. I've got another computer here that I use. It's my non-production computer, but this is where I do all of my editing. Right, so let me open up Final Cut Pro here, and I'll show you exactly what I mean by having two different audio channels. Okay, so I'll take a second to open up here. It's coming, guys. Yeah. So I usually have 3 audio tracks. One track is the A camera, at least 3. Another track is the B camera. And then what I also have is a screen record. Sometimes even four audio tracks. Yeah. So let's see if I'm having Final Cut issues here. It's trying to open. Here it is here. Yeah. So I use Final Cut Pro to do all my video editing. It's a lot easier than using Adobe Premiere Pro. But I have multiple angles here. See here? And then down here, this is my F8. This is the audio here. And this audio here is really good because it uses that microphone up there I just touched, right? The Shure SM7B. And then what you do is when you import all this stuff together, you can actually, you can synchronize it together. So all you do is you select all your products here, and then you just right click, and then you select your synchronized clips, and then you select your resolution. I use 29.99 right here. And then it'll synchronize everything together. So it's easier to do your editing here directly in, yeah. Okay, let me go back down here. Lots of technology going on here today. Okay. All right. Thank you, Devon, for that comment about me as a teacher. Thank you. You're the best teacher. Thank you for that. God bless you. My dad used to say, those who can't do, teach. And those who can't teach gym class. And I suck at sports. You're all out of luck. I'm just kidding. I love teachers. They can do. Yeah. Okay. All right. Next up, Kex, thank you for subscribing to my channel. You wrote here, I had a question about inverse ETFs. Yeah, that was missed as well. If you have time, can you discuss? Yeah. So you can buy ETFs that represent the short side of a certain sector if you want to, right? The pro shares. Just keep it small position though. Yeah, they're extremely volatile, and don't ever make any position in your portfolio more than 5% of your portfolio, especially if you're going to invest in these levered up ones. Yeah. Okay. But the reason you might want to do that, go long these short ETFs, is if you don't have an account that you can actually short stocks in. You can only buy securities. So you buy these ETFs that actually have a negative correlation to the market. Yeah. And if you want more detail on the best resource ever when it comes to analyzing ETFs, you can just go here to, it's called etfdatabase.com, etfdb.com right here. And what you can do is you can screen ETFs here as well. They've got like 5,000 ETFs. You can look at it as well. Yeah, I'm sure they have a lot of short ones here as well you can look at. Yeah. Okay. There's an ETF for everything. God bless Vanguard, man. Okay. Okay, and then BDev50 wrote, hey, I came in late. Can you take one more? Yeah, absolutely. I'm here for you. Yeah. Okay. You wrote here, I started your MBA course on Udemy. There's a 7.5-hour course called an entire MBA one course. Yeah. You wrote, do you have any comment for anyone struggling with section 1, the starting point, find your passion? Yeah, absolutely. Thank you for that. Yeah. So if you haven't found your passion yet in life, and it took me until my 40s to realize it was teaching, but if you haven't found your passion, I always recommend doing this exercise. Let's say that I tell you that for the next 30 days, you can't travel, you can't go to work, you can't go to school. What are you going to do with your time? Whatever that answer is, that's your passion, your purpose, your raison d'être, and no matter what anybody says, you go after it. Yeah. Yeah. Okay, great question. Next up, Mekiak wrote, do you recommend subscribing to Seeking Alpha? Yeah, website to find suggestions on interesting stocks. The only good thing about Seeking Alpha is that it can actually summarize a lot of stock information quickly, kind of like streetaccount.com used to do. So you can get the messages sent to your inbox immediately. But what you can do instead is just set up Google Alerts. Go to alerts.google.com, enter in your favorite tickers, and whenever there's news that comes out on any company that matters for you, you'll automatically get an email, which kind of offsets why you need Seeking Alpha. Be careful with Seeking Alpha too, because, and by the way, alpha, for those who are not familiar with it, means how much you outperform your index by. So if a hedge fund's index that they're being compared to is the S&P 500, and the S&P 500 is up 10%, and the hedge fund's up 11%. That hedge fund has generated 1% or 100 basis points of alpha. The problem with seeking alpha, though, or any editorial website with finance advice, is that people always talk their books, right? So mutual fund managers and hedge fund managers will get onto those websites and be interviewed and talk about companies they love so they can push it higher and vice versa. Yeah. Just be careful of that. And there are some people that are just wizards at that, like Bill Ackman. You know, he's very well spoken, unlike me, but I am very good read. Yeah. I'm very well read. Yeah. Okay. All right, Chris Cross from Vancouver. I got the cleaning stuff upstairs. I told him to vacuum when I'm doing this call, but it is what it is. All right, so Chris Cross wrote, why can't you mix both strategies, value and growth? Or is it just unusual? Let's say 50% value shares, 50% growth shares. You can do that if you want to. But most people it's like religion. You're either one or the other, and they don't see eye to eye. Now, an old school portfolio management or personal finance recommendation was take 100 minus your age, and that's what percent you should put in value or low risk investments. So if you're 90, 100 minus 90 is 10. 10% of your investments can be in growthier investments and 90% in value-based investments because you don't have as much time to make it back. But that's so old school because I think that there's a lot of people on this call that will make it to 150. Yeah. Sorry about that background noise, guys. Okay. I'm going to ask them to stop. Give me a second. Okay. All right. All right. Next up, Mark wrote, it was the SEC to tighten oversit of treasuries. Yeah, I don't know what that means. I'm so sorry. Yeah. Okay. And then Devon wrote, Chris, what do you think of the Apple car if they're planning to compete? Yeah, with Tesla. Yeah. That rumor came up a couple of years ago because there was speculation that Apple wanted to buy Tesla at one point. But more importantly, people started seeing patents that were filed by Apple, which is kind of a good channel check on what the company's going to do next. And they had a lot of auto-based patents. Also, on Apple's website, they were hiring a ton of software developers to work on auto-based products. Yeah. But I think investors would absolutely hate that just because that's a lower margin product. Yeah. All right. Okay, next up, MTI wrote, hey, Chris, hey, I need your advice regarding a job offer from a Japanese company. Sure. Which I think is a fraud offer, you wrote. Do you have any recommendations on how to figure out if it's genuine or not? Thanks. Yeah. I don't know what the nature is of that fraudulent offer. But if any company offers you either shares or cash, always take cash. Because in the unlikely event the company does well, they're going to give you options anyway. It costs you nothing. Yeah. You can also go to Better Business Bureau to do a background check on them. You can also look at the quality. And if you want, I can take a look right now. You probably don't want me to, but I'm happy to do it on LinkedIn in real time. You can also go to Glassdoor.com and type in the company's name to find out if it's legit. Yeah. But if your gut tells you it's fraud, probably is. Okay. And then Mo wrote, great, thanks, my brother. You're most welcome. All right, Sundar wrote, I just checked upon your course on options in Udemy. It immediately jumped to this live streaming in YouTube. Great job. Oh, wow. Very cool. Thank you. Whenever that happened. And then BDev wrote, thanks, Chris. You're most welcome. And then Ralph wrote here, hey, Chris, can you still allow me some time to buy the gold MBA, please? I was not able due to technical problems. Yeah, just send an email to, we are sold out. And I haven't had anybody ask for money back yet, but I usually get 1 or 2 people before the end of February. And I always tell my students, if you're not getting a 10x return on your investment within the first 30 days, ask for your money back. Yeah. Okay. But just send an email to support@harounventures.com, and I'll make a note of it to check that today. Yeah. Thank you. Ralph. Right. Okay, cool. All right, guys, I'm going to wrap up this call. This was a fun call. Thank you for your patience with me. with respect to this. Bottom line on this, I don't know if it's really worth it yet. It's a little bit too pricey, but I'm certainly really excited about the future potential of VR. And Apple's the only company that's nailed it to the extent that you don't get motion sickness, but the price is too high. Okay, guys, God bless. And for those of you, my Silver MBA, I will see you at 10 a.m. my time today. Check the first lesson in your curriculum, the Silver MBA, to get the link to the Zoom call. Thank you. All right. I'm going to end with this life-changing video, Steve Jobs interview that I licensed from the Silicon Valley Historical Association. See you next week. Thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.
Hi, I'm Chris Haroun, and this MBA degree program is not what you think it is. It's better. This program is more than 25 years of business experience, all rolled into one easy-to-access online program. I've sold over 1 million courses in every single country. I've worked at Goldman Sachs. I have an MBA from Columbia University. And I've worked in the venture capital, hedge fund, and consulting industries. I've also started many companies, and my courses have been featured in Forbes, Business Insider, CNN, and NBC. If you're ready to nail your next interview, get a better job, get a raise, start that business you've always dreamt of, improve the one you currently run, or better manage your personal finances, then this MBA degree program is for you. I can't begin to tell you how comprehensive this program is. It's got everything, including more than 300 hours of on-demand video. I would have to do one of those dramatic opening title crawls from a certain space movie just to show you. And check out all the amazing reviews from students who have already enrolled in this MBA degree program. Last but not least, there is a 30-day, 100% money-back guarantee. And because you can access this program from any device, meaning a desktop computer or a laptop computer or a tablet or even your smartphone, it means you can comfortably fit it into your schedule. Even if you work full-time, it's no problem. So if you're ready to unlock the key to your potential, then I'll see you in class.